All right. Good evening, good morning, good afternoon, wherever you are. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, who may be joining us later, possibly, right? Super busy day for Ryan, but we are definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So right out the gate, please drop me a one in the chat if you all are ready to go. And, and we can get this session started this evening. Let me see. We got a bunch of ones coming in. Jeremy, David, everybody I see. Thank you so much. Neat. All right. Joy. Glad to see everybody. We are all ready to go. So let me make sure that everybody has control over their microphone. As always, hey, if you are not asking a question or making a comment, let's do our very best to keep our microphones on mute out of respect for everyone else. So, all right, Shell is here, Brandon. Awesome. All right, so let's go. Plenty of people here. Let's dive into everything that happened today. So let me close this screen out, take a look at our Forex Factory calendar, right? Very, very important that we check this, right? In the morning, whenever you get a chance, make sure that you plug into this to see exactly what's going on for the day. We can see that month over month GDP came in, right? For the British pound, 0.1% expected, came in, just missed. Okay. That is what it is. But core PPI today, PPI month over month came through. It's coming down, everybody. It's coming down. All right. That inflation, we're trying to figure out, is it coming down? Is the Fed going to pause rates? All the lagging effect from these accelerated rate hikes that we've been going through. Is it working? Unemployment claims came through misforecast, right? 233 expected, came through at 239, right? So that creeped up a bit, missed the forecast. So we come over to trading economics and we see the big news. US producer prices fall the most in nearly 3 years. Okay, so producer prices for the final demand in the US fell 0.5% month over month in March, the biggest decline since April 2020, compared to forecasts of a flat reading. Two-thirds of the decline can be attributed to a 1% decrease in the prices for goods. Thank goodness, namely gasoline. Prices for services edged 0.3% lower, led by a fall in margins for machinery and vehicle wholesale. Okay, so that's good news. That's good news for the Fed, right? We know that there's, right, the speculation of, hey, you know, are they going to eventually pause these rate hikes? Maybe it's one more in May. Maybe they pause. We know the market is saying, hey, maybe a pause and then cuts by the end of the year. The Fed's saying, hey, we don't see cuts coming by the end of the year, but they're not so aggressive in rejecting the notion that they may pause rates this year in 2023, right? So that rhetoric is starting to change for a little bit. And as a result, right, we know the major thing that can affect the strength of a currency is monetary policy, central bank interest rate hikes. So if we see that the dollar is falling for a third straight day, is because we see that these inflation numbers that are coming through is starting to show a decline in some key areas, right? Labor market, right, still fairly sticky, but we're starting to see those unemployment claims creep up. But for the most part, those rates are starting to take effect. So the market's hoping that we may see a pause in rates. And if we get a pause in rates, okay, that can cause that decline in the dollar. So you see the dollar falls for a third straight day, which plays into our technical narrative, right? Fundamentals and technicals. So if we look at the DXY, we spotted a while ago now, the right tip of the crown, and we see that we continue to get a decline. Everybody see that, everybody understand how the technicals and the fundamentals come together. And it gives us an edge when it comes to swing trading. Drop me a one in the chat if you're starting to understand that. Very, 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 very powerful. Okay. To gain an understanding of the fundamentals as well. And I hope that for those of you who have been with us for some time now, to understand that you do not have to be an econ major. It is not rocket science. Can we agree on that? Drop me a 2 in the chat. Do we think it's rocket science? Somebody talk to me. Let me know. Drop me some 2s, or take your microphone off mute. Let me know how you feel. Right? You don't, right? You do not have to major in economics just to understand a few key concepts. Now, if you do decide to go major in economics, that can only benefit you even more, right? And hopefully, when you apply it to trading, that is not as boring as it might have seemed in Econ 101, microeconomics, when you took it in college, right? Because you're applying it to real life situations now, right? And it's not just theory, okay? What's the difference between monetary and your fiscal policy? Well, your monetary policy, right, is that policy that's coming from your Fed. So when we talk about, we've been dealing with inflation, right? And we talk about what is the Fed's, the central banks around the world globally, right? What is, their monetary policy in regards to inflation, consumer prices, things of that nature, right? So drop me an understanding if you understand that. Okay. Now, when we talk about, let me see, I'll have my chat up. Okay.
Benny, one thing for sure, I know that's not econ because I got good naps in econ.
So at least it's a little bit more exciting, right?
Yep.
So that's from the Fed, right, with your monetary policy. When you talk about your fiscal policy, now you're talking about the government, right? How does the government, right, when you talk about things like government spending and taxation to influence economic outcomes, right? So on one side, you have the Fed, and then the other side, when it comes to fiscal policy, now this is like a kind of a bread and butter simple explanation, right? For the sake of time tonight, we probably could do a whole hour on it. But on the fiscal side, you're talking about government and government policies, right? So when you start to key in on, administrations and what their plan is in regards to fiscal policy and affecting the economy and driving results, okay, and keeping this thing moving. So it usually comes, with, like, we talk about taxation, and you talk about here in the United States, when you talk about the whole Republican, the Democrat, and what they do, how one party feels about taxation versus the other, right? Lower taxes, higher taxes, taxing the rich, all of that stuff. So it becomes very important, right, in your life. And sometimes at one phase in your life, financially you may feel one way, and then it's another phase in your life when you're more financially secure and you become a little bit older, you may start to think another way. You know what I mean? So that's why you always hear, at least here in the States, people always say, hey, a lot of times people vote their pocketbooks, so it's not always necessarily about social issues and things like that. It can come down to, sometimes people are looking strictly from a fiscal policy perspective, and how it might affect the businesses that they own, and things like that. So that's just simple, right? That's a simple difference between what's the difference between the two, right? Where they lie, right? Monetary policy more on the the central bank side, the Federal Reserve side, and then when you talk about fiscal policy, you're talking about those policies set forth by the government in regards to spending and taxation and how it influences the economy. Hopefully does that make sense?
Yeah. Yes.
Yes. Okay. Yep. So all of that is important, important. Right? So hopefully I see how you guys see how that, right, it really affects your everyday life, right? Okay. So hey, we got continued movement to the downside, right? So hey, see what happens if we eventually get back through the support. Of course, in between you move down through the charts, you start to come into some levels as you make waves. Like you can see here how we've got a daily level, right, that it just broke through. Okay, but you can see it playing out, right? As we zoom in, that dollar is moving sell side, right? Now, all the end of the world doomsday scenarios that we keep seeing, the death to the dollar, right? Things like that you might see on your Facebook page, like just relax. Right? The dollar has been in some low places, right? So keep in mind that a lot of people that's talking that stuff, right? They're not looking at a technical chart either, right? The way that you look at a technical chart. So yes, the dollar is declining, but it has been on a tear for multiple years now to the upside. Okay, so you know it's all right if they run the doomsday scenario and people start dumping off everything. That just gives you, with your investor hat on, it gives you an opportunity to buy it at a low price, right? And so you tend to start thinking about things a little bit differently. All right, so yeah, so that's the great question, Jeremy. That's the dollar index, right? So we're still following that crown. All right, the market is moving in waves, right? So that is the dollar. So guess what? Dollar's moving down. We've been following this gold trade for quite a long time. And guess what, everybody? Right? We are running right into that level that we projected a long time ago. So here's your pretty much the double bottom off support. That's textbook, right at the 61.8. And we continue to move on. Right, we got the flag pattern that ended up forming when price was consolidating around that 127 zone. And what do you know? Right, we're running right into that D extension target. The market moves in waves: A, B, C, D. Okay, that's how it moves. Right, so you can see here we're on your 1 hour, right, where we had drew that crown, that reversal pattern at some point. Right, didn't quite make it to the low, but you can see where we got the reversal and price continued to move up out of that zone. So it didn't play out to that equal right tip, but we were long, right? We were linking long and we got it to move. So that is gold, right? If you look here on the weekly, all right, look at that level. Look at that. It's amazing. So sometimes you have to, when you're looking at a technical chart, it allows you to move beyond all the hype, right? This is not unforeseen territory. We've seen it before, right? What is that? 2020? Look, 2022, okay? No worries. No worries. It's just good old price action. So that is gold. Any questions on that?
No.
All right, cool. And hey, you may not be like, I'm not all the way there yet all the time, right? Where I can, I talk to Ryan all the time with mindset where I'm holding these trades. I have my moments, you know. It takes time, but if you work at it and you're doing your technicals and you're understanding the fundamentals better, it's only a matter of time before you have your breakthrough. You just have to stick to it, and you have to be disciplined, and you have to be consistent in your approach. All right. So that's the goal. Take a look at the Euro USD as a result, right? So you can see how the way we frame the market with the fibs, the way we use it, you can frame a very, very good narrative. It'll tell you a story if you combine the technicals the way we do it with the fundamentals. Okay. And there's plenty of ways to skin a cat, right? We just want to teach you what we know, right? And you could chew up the meat and spit out the bones, right? That's what we're here for, is to share the knowledge that we have. So here's that Euro USD. We broke that 110 level, everybody. Right? It's running. But here, right? It's another ABCD wave right off that 61A. Right? And we're moving long. Okay. We're moving long on a swing from the daily. That's a beautiful move there. Right? So if this runs and completes, right? Look, A, B, C, D. It's just how the math works out, right? Mathematics is about patterns, right? That's the pattern. Okay. So that's the Euro USD, which is moving right along. Here we are on the 4. Oops. The smaller wave, got a deeper correction on the smaller wave. But even if I like trading the smaller wave on the 4, that's an 8-6 retracement. It's about to run right into our extension here on the 4. Okay. A, B, our C, our lowest point within our AB boundary. As long as it doesn't take out the A, it has no choice but to go our way. Okay. And we're looking for the extension. Okay. Questions on the Euro USD? David, yes, sir. Is your microphone off? I think I got you. Yeah,
yes, it's on now.
Okay, gotcha. Okay. What's up?
Okay, how do I set up this stochastic on my chart?
Oh, you want this stochastic settings?
Yes, please.
Oh, okay. Hold on one second. Right, you take some screenshots.
Okay.
Here you go. Right, top part. Let me know when you got it.
I'm not seeing it. I'm seeing the chart. Okay. Should I do it now or later? I'm looking at
You
it.
can do it later. You can do it later. Just take
Yeah.
screenshots. Plug it in.
Yeah. Okay.
Yep. So that's that.
It's recording, so I could pay back, right?
You can.
Yeah. Okay. Thanks. Yeah.
You're welcome.
Okay. I will do the playback.
Yep. Then that's the last part. Mm-hmm.
Okay.
Yep. There we go.
Okay. I appreciate
No
that.
no problem. And that's just the Euro USD on the 1. Okay. It's just running.
Okay. Thanks.
Okay. Bulls have control of the market. Look, you got a slight retest there at 109.74, and it's just running.
Okay.
Yep. So that's the Euro USD. Let's take a look at this this pound dollar. Okay. All right. Similar narrative, right? Long. Okay. See how it's broken out of that range now that we were talking about. And that's all because we know that that dollar is weak. Okay. Yeah, it's breaking out. Okay. 4, right? You zoom in, and you can see exactly what it's doing. You come here, okay. This is if you want to just run your fib off this range, right? Bottom to top, you could run it off the low, right? Because the market, as it moves long, it's going to move in waves. So you could just take it. You could say, you know what? I want to run my fibs from this low of the range, like so. See where I come out. And you can see how we just headed right into a D extension. Right? Now a 382 retracement up against daily support. And we just continue long. Beautiful, beautiful price action to the upside. Okay. So your pairs are moving long against the dollar, right? So you remember how we drew it up. Like, hey, is it going to come back and retest, right? And break lower, or is it going to stay above and continue to run? And it's running, right? The market will tell us, right? We don't have to try to guess, right? If we stay patient, right? If we stay patient, right? The market will tell us, right? And then we make the play. Right. So we got pound dollar moving long. Let's continue to move up too. Questions on the pound dollar?
Hi, Benny. Just a quick question.
Sure.
Yeah, most of the times you say we should stay patient, right?
Mhm.
For example, looking at today, the CPI news that came out, and the question is, how long do we have to wait patient for? I don't know if that makes sense.
Yeah, like I don't. So when we say stay patient, we mean like, okay, see what that data, how that data comes out, right? Once that data comes out, like, does it support, my narrative that I'm long, right, against the dollar, or is this telling me something different? So what we're saying is when we say like stay patient, when you talk about fundamental data, is like some people try to go down to the lower time frames and just time it. Like, oh, it just broke resistance on my 5-minute chart or my 15-minute chart. Like, I'm going long. And then you get caught in a reversal and then it goes the other way. Because when you're playing down on those lower time frames, right? You're really seeing the reactions at a granular level. So that's what we mean when we say like, hey man, we're not trading the news, right? Especially because we're not. I'm talking about from more so from a lower time frame perspective when it's just like, I'm not, oh, it just came out, the news was positive, I'm getting long. Because you get whipsawed, right? You get whipsawed. So as swing traders, it's like, let me see what those numbers looks like. Let me see, the market's gonna react, right? So you could have gotten a PPI number that came out today the way it did, but that initial move for whatever reason could be down, right, on the pound dollar. Then it recovers, right, and then it gets long. What we're saying is like right when that news come out, I'm not trying to plug trades in. Does that make sense?
Yes.
Right. So you even have like some prop firms and things like that that'll tell you like you can't trade 3 minutes before news comes out or 3 minutes after news comes out. Because people get blown up. So we're like, hey, let's see how the data is interpreted. It can move all types of ways in the beginning because a lot of times it's multiple things. So like the PPI report came out, but look at how the report is reading, right? So a lot of times people try to jump into and trade the number, right? So they'll come and try to say, where is that? Core PPI, -1%. Oh my goodness, inflation is coming down. But look at how, once the data is interpreted, how they break it down, right? 2/3 of the decline could be attributed to 1% decrease in the prices for goods, namely gasoline. Okay, how's the market going to interpret that, right? Because that's gasoline, that's energy, right? Well, core PPI takes out food and energy. Prices of services is 0.3% lower. Service sector, okay, led by fall in margins for machinery and vehicles. You see how they segmented that out? I don't necessarily want to take my shot at a doubt. If you like to gamble and take shots and stuff like that, you can do it, right? But if I'm on a lower time frames and I'm trading and I'm trying to use super tight stop losses and things like that, I don't want to get caught in that. Right? There are a ton of accounts blown on like non-farm payroll days. Right? I don't know. People like to rush, I guess. So they take their shot at it. But and then they'll build strategies and how to trade the non-farm payroll, how to do. But at the end of the day, the reality is you don't know. You don't know. Right? So how solid is your non-farm payroll trading strategy if you work for this one, but the next 4 you get blown up? So we say, hey, it's better to wait. Great question, right? And I hope I'm providing some clarity on that.
Yes, thank you.
You're welcome. Now, if I'm in a swing trade, like this Euro USD, because a lot of your for example, if we go back to like the Euro USD, a lot of your when you're swing trading, you're using wider stop losses. So it's not a big deal anyway. right? So if there's nothing catastrophic that changes the my overall bias, right? So we see the calendar, there's reports that come out all the time. So in this move, like you see, there's been corrections. Like this was a correction here. If I go back, there probably was something fundamentally that came out of report, right? But it didn't change the overall bias that the euro was long against the dollar. It created a correction. Now, think about it. If I'm down and I'm playing around on a 5-minute chart or a 15-minute chart, and I'm long, I'm trying to play a quick long play. Yeah, I just got blown up by that candle, right? That's a 241 pip candle. Like all my stops got smacked, right? If I'm trying to play long on my 5-minute, my 15-minute. But when you're looking at your 4-hour or your daily, right? Or you want like, okay, it corrected. This is still within my AB boundary, right? I'm swing trading. There's no reason for me to jump out that trade. Okay. So everybody understand that? Yes, no?
Yes.
Hmm? Like, I mean, if I'm swinging, like, I mean, if I'm swing trading, I'm expecting those type of occurrences to happen. But like we said, as long as it doesn't take out the A, it has no choice but to go my way. So my risk management is on point. So I'm just gonna let it keep rocking, right? So it's a different mindset. It's a different psychology, right? To me, it's less stress, because yes, a trade, a fundamental occurrence can happen, and it can create a 100 pip move in the opposite direction. Well, I'm in a trade that's supposed to go 250 pips or whatever. It is what it is. It didn't stop me out, so that's still in play. I'm not gonna let my emotions get the best of me. So it depends on a lot of times what time frame you're trading on, right? In regards to your perspective, uh, as it relates to, uh, okay, we got fundamental news. How long am I waiting? How am I playing this? So that's what we mean when we say don't trade the news. Don't try to, oh, that's a positive number, I'm hitting the buy button right now, right? Because oftentimes that market can go, depending on the emotions, right, from investors, institutions, banks, it can go the other way before it goes in your direction. And now you're stopped out, especially if you're over leveraged. And then after you get over the stop out, you look and it's gone, 100 pips in your direction, but you don't have any capital to play with anymore. It's game over. Right. So, but like this swing, right? If I'm on a 4 and I'm taking, hey, it's in my 61.8 zone, right? I've got structure back here, right? Like 61.8 zone here. Yes, I had drawdown. My stop's below the A. Right. If I'm playing it with my stop below the A, then my mindset has to be that this is still in play. Right. For example, go and look at this is one of the dollar pairs. Okay. Dollar crosses. Look at the Aussie dollar. Fire it back up. So okay. So here's our Aussie dollar. Okay. Is moving long, right? Off the support now. Okay, after being bearish from the weekly perspective. But now look, all right. See how that's moving? How many people are still in that Aussie dollar buy trade to the 382? Anybody? Huh? Yes, no? right? Missed it. Jeremy, yeah. See, so, right, my risk management was figured out. My stop is at my D extension. It didn't take me out. All of this I can't control. All I can do is determine the bias and set up a trade idea. That's it. I know it's human nature to want to control everything and be right all the time, but it's not how it works, especially in trading. And it doesn't have to work that way. That's moving long, right? We got a weak dollar. We got some bounce. Why? Because we're like, man, the Aussie has been declining, right? We've got concerns globally. But guess what? When those numbers come out, we always say you need a catalyst, especially when you're in a range for consolidation. Well, we got the fundamental, catalyst. Well, it's a commodity currency, that Aussie. So if the stock market looked favorably on that PPI number because they have hopes, right, that the Fed will pause rates, that's positive signs for the stock market. If you get a stock market rally, oftentimes your commodity currencies will do well when the stock market is rallying and you got a weak dollar. So yeah, it's just been hovering around, accumulating, but now it looks like they get that 382, right? And when you look from that higher time frame perspective on the weekly, that's found good support, right? So from a long-term perspective on the weekly chart, okay, we've gotten break and a retest, right? And now we're moving, right, to the upside on a weekly chart right now, okay? So if we go to the daily, starting to make some headway, right? Starting to break through some levels. So it's like, hey, trade what we see. It's just we so happen to be on the 4-hour, and the Fibonacci framework gave us, hey, this is the 80-20 zone. Okay. And it's reversing. So it's sloppy but it's moving in our direction. Okay. So here, stops here, trade small because we divide our risk by stop loss. Man, Benny, that's a wide trade. Yes, I know, but I don't control the stock market, right? I'm trying to be perfect in an imperfect market, right? A market that's driven by emotion, fear, and greed. And the market has the ability to stay irrational far longer than you can stay rational. So if I understand that, hey, I don't control the market. I don't need to make it all in one day. I'll trade small. I'll widen my stop. I'll let the market do what it's going to do. I know my risk before I take the trade, right? Yes, I have drawdown, but I'm a swing trader. I don't have to have a perfect entry on swing trades. All right. That's 200 pips if it goes to that 382 out there. 27. All right. Look here on your one. This is that 4-hour fib brought down to the one. And that swing. I can't predict all of this. I can't predict the path in which it's going to take to get there. I just can try to put together a trade idea that, hey, I have an idea that says it may get here. How and when, I don't control. I don't want to. Right. I don't want to be glued to my computer. I don't. Questions on the Aussie dollar?
No.
No? Cool. All right. NZD USD. Let's take a look at it. All right. 1 hour. We saw that bullish candle break that trend line. Right? So when we were looking at it, it was like, hey, sell zone, buy zone. Is it going to test this trend line and continue down, or is it going to break it, right? You see the orange line, you see the purple line. This is textbook, okay? Sell zone. Do this night after night because it's good visual repetition. Okay. The one-off training program does not do it. You have to get in the arena, right? About 20 training programs will still not be where you need to be. You have to see it happening. Sell zone on a regular basis so you can commit the patterns and the price action to memory. Buy zone. And that's just focusing in on that last impulsive leg. There, okay? If that's not a test of support and a bullish engulfing candlestick break of the trend line, if I ain't never seen one, I have to take a shot on that. If I lose it, I can live with it, right? Take the fib off. Look how strong that was. That's a consolidation and a breakout that closed bullish above this 1 hour resistance level. And the reason why I say you have to see it over and over again, because it takes time to build the confidence to pull the trigger, right? Always related to force. We watch game film all the time. Why? Because it's a read and react sport when I played football. It's a read and react sport. If I'm playing safety, I'm playing corner. If I look and I see that left tackle leaning heavy on his hands and I'm at the safety, he's in his 3-point stance and he's leaning heavy on his hands, it's a high probability based on the game film that I watched. This may be a run play. I'm shooting an alley. I'm running. I'm hitting my guy. Right? What are the patterns and the tendencies? Right? Watch the film. Watch the film. That's what this is about. Yeah, you could trade, Janice. That's a great question. You can trade to the next resistance, right? Try to get it. You can go level to level.
Okay.
It's a great way to trade. It's a great way to trade.
But you would take off the fib for this one just because you were just pretty
No,
sure.
you could. Yeah, I would enter here. Like I'm seeing that. I can enter that with no fib. I'm putting my stop below that low of support. I've got a consolidation breakout. That's just classic technical analysis, right?
Right.
I got a consolidation breakout. The candlestick sign language of the Forex market, I'm taking that. Right? I'm taking that. You know, even if you say, you know, I'm entering that, that's my initial entry. But if I'm just, hey, I love the fib, then you run your fib and you just wait for a pullback.
So we
right?
would still have to wait for a pullback, even if we were just going to trade on support and resistance lines. We would need to wait for a pullback so we could get in at a lower price.
If that's your trade plan.
Okay.
Right? If that's your trade plan, right? So you always hear Ryan hit somebody will ask a question and say, well, what is your trade plan? So, right?
I got to work on that.
Yeah. So like this here, and your trade plan will evolve over time, right? Because you're gonna get the visual reps in, you're gonna see certain things. Well, like how will I play that? Right? Are there any exceptions? Like, hey, I like trading at a 61.8 or a 7.86, but do I have a rule that says if I get a 50% retracement with structure, see these 4-hour levels?
Yeah.
If I get a reaction, do I take a trade off at 50% pullback and a correction on the fib? Yes or no? My trade plan should tell me. You know what I mean? Right? Try to be as black and white as possible. Like this here, that's hard to turn down. Like I'm expecting that move to go. Now, where I'm at now, so if I take this off of, I got a trend line break, I'm in the buy zone, bullish engulfing candle, broke through a resistance level, broke consolidation, broke the range, right? Boom, that's a range play. These here, like there's big time traders, like the Mark Minervinis of the world, like other traders where they look for consolidation breakouts, like on a weekly chart. Think about that, right? So I'm looking at a weekly chart and this stock has been, you know, or currency has been consolidating for weeks on the weekly chart. And now I got a breakout from a weekly. I'm plugging that.
Right.
I'm plugging that. I'm putting 5%, whatever I'm putting, I'm backing the truck up. That's how they trade a lot of times, right? You know what I mean? And
Yeah.
I'm playing that because that's on a weekly chart. This bad boy is about to run.
Okay.
You know, so now if I'm in this and I'm thinking New Zealand commodity currency, we know like let's go here, right? We go to the NZD USD, right? Just this chart freeze too. What in the world? Hold on. This is an internet issue. This happened. So we go, hold on a second. Okay. So maybe I can. All right. So we go to the Forex and let's go take a look at the NZD. So you can go here and look at it. So look, you can see, like to read the data, NZD, New Zealand dollar, appreciated past 62. This is versus the dollar. Rebounded slightly from 2-week low, touched earlier this week after data showed US consumer prices rose less than expected in March, right? We know about that. That's the CPI, okay? Bolstering bets that the Federal Reserve will likely stop hiking rates after the May meeting, right? Domestically, the Reserve Bank of New Zealand surprised markets by delivering 50 basis points, a 50 basis point rate hike in April, defying expectations for a more moderate quarter point increase. Boom, that gave strength to the New Zealand dollar. The central bank has now raised interest rates 11 straight meetings, lifting the cash rate by an aggregate of 500 basis points since October 2021 and bringing borrowing costs to almost a 15-year high, right? So it's got that on its side. Now it's a commodity currency, right? So let me finish out. The board reiterated that consumer inflation was still too high and persistent, and that employment is beyond its sustainable level, while adding that it expects domestic demand and inflation to cool in the coming months. Okay. So it's got some things from a monetary policy perspective on this side, especially versus the dollar. Okay. But standalone as a currency, aggressive rate hike. Okay. Benefiting from that. PPI came through today for the United States down. Okay. Hey, stock market feels good. New Zealand dollar commodity currency, right? Could benefit from that, right? Mainly, right? We got a weak dollar. So if I'm thinking, hey, this is going to continue long, if I've entered bullish here, then now I'm starting to play my fib rules. Like, if my bias is still long on this NZD USD, I want to see a correction. If I can get a correction and a good discounted price, you know what I'm going to do? I'm going to plug in another position here. Okay. That's what your trade plan calls for. Bang. I'm in. Right. This continues long. Now I got 2 positions in. I'm good to the D extension. Okay. And we carry on.
Wow. Thanks.
You're welcome. You're welcome, right? Because look at what it's doing. Look at how it's forming a base, right? So if that dollar just continues to decline, right? You got a weak dollar, and that's the counter currency, and we continue to see it move up. We can continue to see it move up. Here's the previous weekly high at what 63.78, right? Then you've got weekly resistance there, and whatever levels that we have as we move down through the charts. But you can see here on this 4, right? That's pushing long. Okay. So that's all we can do is put the trade ideas together, calculate our risk, plug it in, and see what we can get out of it. That's all. And like we always say, sometimes you're the bug and sometimes you're the windshield. That's it. Put your best idea forward, pull the trigger. Right? So that broke trend line. So that's the NZD USD. So things are moving along against the dollar, right? We look at this dollar Swissy. Okay. Right. And the Swissy, Ryan was talking about it this morning, how it gained strength. Right. Now I don't even have this one. I reset, right, to clear my charts after remark. But this is moving bearish. We can see this, right? So look at what's going on. Look at the US dollar Swiss. Okay. You can look at it. Here's another area. See, it's strengthened past 89 per US dollar in April, the highest since January 2021. Think about the fundamental narrative and what happened. Lifted by weakness in the dollar, and as investors gain confidence, think about it, that the turmoil in the Swiss banking sector, Credit Suisse, right? And what happened with the banking debacle is over. Data from Swiss National Bank showed that sight deposits fell by by 31 billion Swiss on the week ending April 7th, the second biggest weekly decline on record, suggesting Credit Suisse may have already started repaying some of the emergency liquidity offered by the SNB, Swiss National Bank. Also, right, because the Swiss National Bank propped them up. Hey, we gotta save this thing. SNB policymakers have repeatedly signaled their willingness to intervene in currency markets to support the franc to combat unsustainable price growth. So the SNB is stepping in and buying Swiss francs. They're exchanging foreign currencies for Swiss francs, buying it up, strengthening it, right? So that means what? Less currency circulating, less available, demand is high for it, supply demand. March data show that the annual inflation rate slowed to 2.9% more than the market expectations, but still remain not far from the 29-year high 3.5% hit last year. So we're getting strength in the Swissy, right? It all starts to come together. Weak dollar, we got a strong Swiss franc right now. There's a decline. It's moving sell side. Okay. So we simply come to the charts and we start to mark our levels. Okay. Start to come in, mark our levels. Just like we teach from. If I'm moving sell side and I have a bias that's bearish, how do I get involved? Well, I like to sell at a high price. Okay. Is there an opportunity that I'm going to be able to get? Okay. And this is strictly talking about trading with the trend. Okay. Put our levels in, support resistance, easy, right? With the smart trade. Well, monthly level, look, looks like we're heading towards key support 87.57. We'll see as we move down through the charts if we have anything in between. Okay. So that's our monthly, like this. Put that last high in. Bang, somewhere around there. I don't have a steady art hand tonight, but here, there, boom. Go to the weekly chart. Monthly and weekly chart, interchangeable. Oh, it becomes clear. Break, see that level? Broke it, retested it. See, look, watch. Dang. As resistance, future support, broke through it, retested it down. That's clear, right? Everybody sees that. There's that monthly level already in. There's that high. Okay. So now that I have this, okay, now that I have this, what I'm going to do is take my smart resistance levels off. I've got a clean chart. And I am going to take these levels down through the lower time frames. So they're on all my charts now. Okay. And I'm going to go to the daily. And I am going to mark those support resistance levels. Okay. So you can see we've got some daily levels here. We'll put those in red. Link these down individually now. We're zooming in on the data. Okay. There's that monthly level. Take this level here. Link it down. Okay. I'll even take this just because. Right? Take it off. Head on down to my 4. Boom. Look at that. All right. Moving down. Okay. I don't even have fibs on it. And you guys can see that. That's a declining price. Checking out. There's my 4. So now that I'm coming into the support, look at that, right? Look at this here. That's that fib running off the high. So we look at it, we can take this off. Okay. Got a decline in price. So I'm thinking, look, break it, retested it once. Now, where's my next? Am I going to get a pullback? If my bias is short, do I get a pullback at some point? Well, you can use price action and structure to determine, hey, where may price get held up again? Maybe here, okay. This level across here. Here's this level, it tested it once already, right? But what I could do is I could kind of just use my fibs to kind of come in and say, you know what? Let me try to measure this thing out. Let me dress this price action up, put the tuxedo on it, right? Or the fancy dress. Oops. And see where, if I'm using the fibs, where I would like to see this come back to for a high price. I would love to see this, right? We know right now I'm in an 80-20 zone, but we're just talking about trading with the trend. It's down. So if we catch buyers at this level, which is why that 80-20 is so powerful, right? And we know we can mark out the 382 target, 61.8 and on up. But if I just have a biased perspective, I don't want to play that. Then I'm just going to say, you know what? I'm short. Well, I need a high price. Where can I get it? Oh, that would be sweet. Resistance, daily resistance, 92.23, 61.8 zone. Smart fib has it red. I'm in that zone. I think I'm going to try to look to get short in this area. I'm going to start putting my limits in. I've got a resistance level there. So I might say, you know what? I always like to put my my sell limits, if I'm using it, right, ahead of my key levels that I like to trade. So maybe I'll put it right there. I'll just put it in that zone. And then if it keeps wanting to push up higher, I like trading that 786 like that. And then you know what I'm going to do? I'm going to put my stop above the A. Because if it doesn't take out the A, it has no choice but to go my way. And I'm going to plug these swings in. And if I catch it, my 61.8 zone here, then my projected D extension is going to be here. So I'm forecasting that, right? D extension. Okay. So if it catches my 61.8 here and it turns over, that's 573 pips. That's a 35 pip stop loss. I can live with that, right? Because I'm going to trade small. Because if this turns over for 500 pips, you better believe when it starts breaking structure and we pull back, I'm going to add positions. And I'm going to compound that swing trade. Okay? That's how you think about it. So what you do is, if you don't use limits, right? This is my plan on this dollar Swiss. So I'm going to go on to my other pairs until it gets to my levels and takes in my sell limits. If I don't want to use sell limits and I want to, wait for some confirmations once it gets to these levels, do you know what you do? You drop you some horizontal levels in there and right? So change this to a horizontal. That. And whenever that day comes for price to get there, I'm just going to put an alarm on it. Okay? So when it crosses it, equals it, however you want to do it, and I want you to remind me every 10 minutes. And you can put your email in, you can put your different alert sound, you can put your phone number in, and you can put right here, you can put, hey, 4-hour sell. When it sends it to your phone, stop loss 0.94536, TP 86, 0.86442. And I'm going to save it and run it. And if it gets to that level, wherever I'm at, out shopping, hanging out at the park with the kids, I'll get an alert. And you got to keep your computer up and running though with this, right? You want to keep your computer up and running, right? So if you got a desktop at home or your laptop's at home, you want to leave it on. And when it gets to that level, it'll send you an email and a text message that, hey, it's reached this 92.14 level. And then you can make your decisions from there. Or you can just put a sell limit in there at that level. Sell limit here, sell limit there, right? Stops here. If it doesn't take out my A, that bad boy is going to turn over and head in my direction, right? So like how we talked about it this morning, how you played, right? The the NZD Swissy trade, right? To the downside. Okay, I'm in it small. I can add positions. We got breaks of structure. I can add positions as I go. I don't have to put the house on the trade. If you're doing it, stop. Right? Look at something like the UCAD. Okay. Say, hey man, we got this range here. Right? It's moving short. Well, how does that play out, right, on my lower time frames? All right. Look at that. Look at that down move. It's gonna move in waves. Okay. Bottom of that range. That's the move that happened on your one. Standing markets keep disappearing. My levels, but it's all good. If right, we just redo it. So plug this in. Let me clean this up a bit. And I'll show you what we mean. So I'll take this out. I take this fib out because I just need my levels. Clean this up. Okay. And I want to link these levels down to my levels. Just do this chart over. And if I go here, hey, to the move coming from the range. Start to run our fibs. Okay. So if I'm in here and I'm putting my sell limit in, I've got my bias. Okay. Put my sell limit at my 786 in case it wants to carry higher. Put my stop here above my A. That trade went my way. Okay. That strong bullish candle stopped on a dime and turned over. Right. So I love it when I have higher time frame structure, 4-hour, daily, weekly structure that's coming in line with my key fib levels. That's short, right? So this move here, okay, call it 88 pips, call it 90. Okay. We could call this 90 pips. Okay. So we call that minus 90. Yeah. And we come here. I would love to see them add the smart trader position tool like you have on trading. I think that's a really cool tool. Hopefully one day. All right. So there's my D extension. Somewhere around there. So I've got it. All right. It's 247 pips. So that's plus 247. and I'm doing my thing. I can look for opportunities to add to the position with breaks of structure, right? Or pullbacks and new levels formed, right? Because think about it on the one, that's a swing high, that's a swing high. This is a 1 hour swing high. Okay. So I'm gonna say, hey, we retested, formed a swing high, add to that position. Okay. You can run sub fibs, right? And say, hey, if I get an opportunity to add on a sub fib, I'll add if it goes into my levels, however you want to play it, right? But these initial trades, right? If I'm risking 1%, I'm dividing that 1% by my stop. If that comes out, depending on the size of my account, to 0.033 micro lots, 30 cents, then that's what I'm trading, right? So if I divide my risk by my stop, so if I take 1% risk on an account and it comes out to whatever, and my stop loss is 90 pips, I'm going to divide that risk amount by my stop loss. And if it comes out to, I could trade 60 cents, that's 1%, then I'm going to say, you know what? I'll put it at this level. So guess what? If it only took that one at the 61.8, that's only a 0.5%, right, that I risked. All right. 3, like that. Okay. Now I'm just going to let it run. If it doesn't go my way, and this is a 0.5%, this is a 0.5%. Somebody tell me what I lost if it hits my stop.
1.
1%. That's it. 1%. Okay. And you see this, right? Right? You can spread this. It's talking to one of our students today. You can spread it out like insurance, right? I can spread the risk out over multiple currencies, right? Over multiple currencies. And trade small. Because it's probability. Right? This is me talking about swing trade, right? This is how I like to do it. This is how we were taught, right? So I don't knock other people's strategies and say it won't work, won't do this, won't do that. That's not me, right? I'm just here to share, right, what I know. Okay. So that's that. Okay. And you just let it accumulate. Okay? Because now if I'm adding positions, right? Okay, I added a position off the pullback. Okay. Well, I'm in profit. I'm adding that position on house money now. Okay. I'm adding that position on house money now. Right? So think about that. Man, trade. Any questions?
No.
No? Right? Look at this breaking back down. Okay. It's been doing this thing, right? Original setup. It came all the way back. See that play with structure right there? Okay. Been tracking this one, following this one, right? We drew this one up. All right. 6-1-8, 7-8-6. Right? Benny, I was in it and then pulled all the way back. I'm losing my mind. Okay. Did it take out your A? No. Right? It hasn't. Okay. It hasn't. If it does, I'm set up at a 0.5%, or whatever it is. It could be 1%, 1%, 2%. And when you're trading, you can have your rules that say, my max exposure on my account, I only wanted to be 5%, 10% max exposure across all of my trade setups. Right? Easy math to work out. That's what I want my. So if everything goes wrong on all of my setups and I'm trading small, the max I can lose is 10%. The max I can lose is 5%. However you want to do it and set your trade. Right? So because they're gonna go, right? Based on the ATR, the average true range, based on how much on average these pairs move per day, you're gonna have some that profit, you're gonna have some that are negative, you're gonna have some that actually hit to take private targets, and now that's added to your account. You're gonna have a few stop out, they're just running, right? You're gonna find new setups that you're plugging in, right? I'm just a machine, right? I'm just a machine playing my game. You know, so this one, we've seen some that are running towards the target of UCAT. This one's taking longer, right? But now it's back moving in my direction to the downside. If it doesn't work out, my backside is protected with the stop loss. Use your stop loss. But this is the overall framework, right? Trading with the trend, and I have a bias, right? But you have to be patient. If you're doing that, and you're saying, you know what? They taught me multiple ways to trade. They taught me multiple sweet spots. I like trading with the trend. I've got a down AB boundary running now. My trend is down. I have to be patient to let that price run up into my zone because I want to make sure that my risk to reward ratios are in my favor. And the higher, based on the fib sequence and the philosophy, the higher it pushes up in the zone, if I'm putting my stop below the A, it puts me in a more favorable risk to reward, right? So if I'm taking that off the 50, right, I've got to stop at 182. My D extension is 5 over 500 pips. And the lower I go in the zone taking positions, right? Look, I'm in a 3, man, that's a long way for that stop now. See, my projected is still here, but the lower I take it in the zone, now I have to start thinking, do I put my stop above that level, right? That 382 level. And if it goes my way, cool. If not, I get stopped out. Maybe I take it at once it gets to a higher level. Well, depends on your trade plan. 618786s. If price gets there, I'll take the trade, put my stop above the A, look forward to get short. Right? That means that if that's your rule, if it hits this 382 and turns over for 300 pips or whatever, you're not playing that because that's not in your trade plan. You have to be stubborn, disciplined. It's hard to do, but it's worth it. Right? But it's worth it. Right? Pound, went over the pound dollar. I felt like we missed a dollar pair. We missed a dollar pair. Maybe we did. Get the pound dollar. Yeah, we did the pound dollar. So I wanted to go over these because that's the reaction, right, that you got as a result of the PPI report that came out today, right, coming off of the CPI report. But you can see, right, the clean moves that are happening in the market, right? If we take a look at the Aussie CAD, right, prices run and then they pull back. If we come to the floor, look, prices run. Look at that 4-hour move. See how that came into the zone with structure, weekly structure there? That's why we come from the top down. And you see that reaction. You got all types of good stuff there. You got a trend line coming down. Now you're getting a reaction at the 127 off the daily level. So if I'm trading with the trend and my bias is still down, then I'm looking for this price potentially. Can I make it back here? Okay. And then will it continue short? Starting to form a high here. This 4-hour candle closes, that's going to be a resistance zone. The stochastic's in the sell zone, right? But you see, if you can stay patient and wait for it to come into your zone, it's a highly effective, right, trade setup. Right? And you can just see the clean moves when that market gets trending. Right. Look at that. That's been moving down. Look here, just there. See that? Look. Right. That's that D extension. Okay. So that's been look at that. The confluence with the weekly level at 65.71, coming around that 61.8 zone, and then moving down. It's 500 and almost 90 pips. The D extension is here. Okay. Okay. So here was my C. See how it's just been moving down. Okay. See how it's just been making the waves to the downside. See how I took this one out because it gave a deeper correction. Right. But then it moved right back down because the overall path is down. Right. So smaller 4-hour waves. Right. So the next question becomes on this active fib. Right. I'm in the 80-20 zone. Okay. And we always tell you, right? This is one of our sweet spots. You don't have to trade that. If your bias is bearish, right? Here's the 1.618 from the daily. This is my daily. 618 D extension. I'm looking to trade down to that target. I don't necessarily, right? I would love it if I can get a higher price, right? So I would love to see if I can get price to come back, pull back, right? And then, sure, may not get that, but that would be beautiful. And we can see that finish out. Right. Here's that D extension. Here's the daily. Maybe it keeps running, but that's the idea. That's the strategy with the trend. All right. Great session, everybody. We ran a little bit over, but I want to make sure I got that stuff covered. Questions, comments?
Great session. Thank you so much.
Welcome. Appreciate the feedback. All right.
Yes,
Great.
thank you. Have a good night.
Welcome.
Thank you so much.
You're welcome. Have a good night. See everybody. Hey, Friday's off, right? We get back at it Saturday morning. Weekly ritual, 7 a.m. Eastern Standard Time. Looking for those opportunities, right? Looking for, hey, if we can find new AB boundaries, what's our directional bias? How do we map it out? How do we forecast? That's what it's all about. Have a good night, everybody. Thanks for your time.
Thank you, Benny.
Welcome.